I want to bring in Dana Daria, who is co-chief investment officer of Envestnet PMC. Dana, let's just talk about this. Joe Mowgli laid this out at the top of the hour, the idea that you can actually get something in short-term yields at this point, and that makes it much more likely for investors to put money there, and then on the opposite end of things, take more risk, and that would be things like technology stocks.
Yeah, I think that's exactly right. And thank you for having me, Becky. Yeah, I think, it's been so many years now, and we're in the asset management side advising the advisors. So many years now of just running away from fixed income because there was no income to be had there. Advisors kind of chasing yield, looking at, dividend paying stocks, but also, going out on credit risk, taking longer duration in client portfolios. And it's really flipped, obviously, now that we actually can earn some income on bonds. You're seeing exactly that. You're seeing that kind of movement back into fixed income space for your income needs. And then on the other side, interestingly, I think with higher yields, obviously growth stocks should suffer because they're longer duration. They have more of their value in their terminal value. So a higher discount rate means that they should be worth less. But I think we're seeing exactly what you're saying, which is that, okay, I'm getting my income from the fixed income space. So value stocks become less attractive. I don't need that dividend yield as much. And maybe I'm willing to take on the risk of the growth stocks.
Is that a good plan, in your opinion?
I would caution against that, actually. I think, look, at the end of the day, clients in the equity markets need to have a bit of a time horizon anyway, right? Whether it's at the end of the day, growth or value, your beta is what's really going to drive your experience in the equity market. So if I'm in the equity market and I have something of a longer term time horizon, I do think I want to look at the rotation to fundamentals, right? And over the long haul, what the evidence says is that price matters, and that my ultimate return is going to in part be based on and not only just value but quality, et cetera. These well-known style factors that we've seen surfaced in the academic evidence suggest that a tilt towards value, a tilt towards quality stocks is going to be better in the long run.